Good evening, everyone. It's a pleasure to welcome you all on behalf of ICICI Securities to Sheela Foam Limited's Q1 FY19 earnings conference call. We have with us on the call Sheela Foam Limited's management, represented by Mr. Rahul Gautam, Managing Director, Mr. Dhruv Mathur, Chief Financial Officer, Mr. Rakesh Chahar, Director, and Mr. Tushar Gautam, Executive Director. Over to you, sirs.
Thank you, Anand. Thank you very much, and especially for hosting a call so quickly after our results were posted online. As far as we are concerned, this is probably one of the shortest time between a board meeting closing, results going up, and us taking an investor call. So thank you very much for all the participants who I'm sure must have had all the time necessary to read the results and be prepared for asking all the questions that were there. So if I go straight away to the results, we have had, as far as Q1 is concerned, compared to Q1 of previous year, on a consolidated position, we've had a growth of 17%. And an EBITDA of a growth of 16% and a PAT growth of 18%. Looking at the different geographies, so India had a growth of 19% on the top line, an EBITDA growth of 22.5%, and net profit growth of 22%. Australia, the growth on the top line was just about 4%. How much was it? 2%?
Yeah.
No, about 4%. And there was a net loss. The EBITDA, of course, grew by or went down by about 50%, but that's such a small number that it appears as 50%. But to that, I just want to add that it was dependent on raw material prices. We've been talking about it. Prices have come down, but whatever they were supposed to pass on to the consumers for the sake of not losing out on volumes, all the prices were not passed on. Now they have, and without giving any strong indication or guidance as far as the future is concerned, we already have an indication of July, and they are well back on track as far as the top line is concerned and as far as the PAT is concerned. That brings me to the topic of TDI pricing. Let me just say that I will change that nomenclature now to chemical pricing and not just TDI pricing, because TDI is coming down and coming down very much in line with what we had talked in the last investor meeting. So in the last quarter, from about 300 rupees per kilo level, it was down in that quarter at virtually the fag end of the quarter to about 255, and today I hear that it's gone down another 5 rupees to about 250. And this is primarily because all the production capabilities or the facilities which were existing in the world and were muted in some way or the other have come back. The biggest one being the BASF plant in Ludwigshafen in Germany, which is about 70-80% now on and ramping up. Even Sadara, which was languishing and which had in fact taken a little bit of a shutdown, is back on track and ramping up. How do I see it going future? It should, I think, as I had indicated last time, it should really be coming down to levels of 225 or something of that order. Though one must be a little careful about this period because we do come into the high season from September onwards, and the past trends have been that there have been minor upward revisions as far as TDI is concerned. But it's slow, it should be stable, may hover around a little bit here and there. The other major chemical, which is polyol, has been steady and only impacted a little bit by the dollar rate, which has gone up by about 6 to 7%. But the advantage that polyol has is that there is a reasonably strong domestic supplier, as well as all the other majors have local tankage, and therefore it is virtually like a local supplier. So the foreign exchange may play a part, but not so much. GST has always been a hot topic. It is settling down as quickly as possible. We do hear of further rationalization of rates from a current level of 4 or 5 rates, if you take 0 as a rate, to down to 3 rates, which is the 12 and the 18, and we fall in the 18, should be rationalized. That happens, it will further support the shifting of the unorganized to the organized. The real shifting, to my mind, will begin once the department or the government agencies begin analyzing whatever people have filed and what the ground realities are. We, as a company, have received our first notice from them, which is an offer for auditing, and likewise, I presume that everybody else would be getting. And then compliance will become important, and that would again help in that movement from the unorganized to the organized part. The other thing in the GST was our continuation of the Kalam or the exempted area project of ours or factory of ours, and we have got the first refund of the government's commitment to pay back what was committed in the last tax regime. The second one is also under movement, which means that is also settling down. I mention all these things just to say that GST as a concept, number one, we can be very sure that it doesn't matter which government comes in 2019 or doesn't come. It is irreversible process. It is the best thing to happen. All the good things have not been on ground, but these are all indications that things are settling down, and I think the government's target is that the moment it reaches about 1 trillion rupees collections per month, it will start simplifying stuff far more. So we just want to wish ourselves all the best for that. There were some new products which we had introduced last year. One was Starlight, which was primarily for the low end of the market, and the other one was Feather Foam, which was for a segment a little higher, but a segment and for another distribution channel in the market. Both are ramping up. Last quarter we did about 53,000 pieces. Add to that the sleeper of 253 and compare it to the previous quarter where it was 245. So we see a number of mattresses jump by about 25%. So it's all that's a good sign that it is happening. SleepX has been introduced. I mentioned that in our last meeting. It is a new channel for us. It's a new animal for us. We are learning the games for, or the let's say the tricks for, or the trade for the internet or the e-commerce business, and how does that fit into? How does a mattress segment fit into an e-commerce type of selling? And how do we evolve that, and how do we make that happen? That's all in progress. To support all this and to support all the good feelings about and the good forecasts and good omens as far as manufacturing is concerned in India, we again, as mentioned before, we will continue with our plans to invest into new capacities, which are going to be both geographically separate from the existing ones, some expansion in the existing ones, and we would be absolutely ready for whenever that does happen. So I think we're well positioned. I would be happy to take any questions, and thank you very much for being there.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question, may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nihal Jan from Edelweiss. Please go ahead.
Hi, sir. Good evening and congratulations on the good set of numbers. Just to start with, could you give the breakup in revenues for each of the major categories, mattresses, foam as technical foam, as well as furniture cushioning?
Yeah, okay, Nihal. I would first of all, I must congratulate you. You're always the first one to ask the question, and which is excellent. It's like seeing a movie, the first day, first show. Thank you very much. I will ask. Dhruv has all the numbers, so he'll just get back.
So the mattress, in terms of volume, have grown by 25%. As against 245,000 mattresses sold in the corresponding quarter, we have sold 307,000 mattresses. In terms of value, the growth is 28%. It is because the large chunk has come from BOP mattresses. On the foam side, the volume growth is 12% and the value growth is 17%.
Okay, if I had to split that between the brands, what was the growth in Starlight? I know would be totally fresh, more or less.
Of course, Starlight and Feather Foam were not there in the corresponding quarter. So we have sold around 53,000 in terms of numbers. So net on Sleepwell, there is a growth of 4% in terms of volume. And in value on Sleepwell is 19%.
Okay. And what is the value of Starlight? It's 54,000 mattresses, I see, but in value terms, what has been the revenue that you've clocked in Starlight?
So it's Starlight and Feather Foam combined is around 12 crores.
Okay, sure. I understand that for Starlight specifically, the target is north of 50 crores for this year. So just wanted to understand, are we on track for that or you expect that to be better by the end of this year?
So I think we are on track for that. Maybe another 2-3 months and one will be able to estimate a little better. But I think we can on track for 50.
Sure. And just continuing on the GST part that you mentioned, I'm guessing that you maybe mean that once e-way bill is implemented, you could see a better traction maybe coming for the Starlight brand. So the question really is that, is it that there will be a bigger distribution reach that will help you grow Starlight, or is it that the pricing differential from unorganized is going to be so less that automatically you see the sales coming through in Starlight?
So I guess it's a combination of both. As far as e-way bill is concerned, I will sort of put it in along with the compliance part of it to just say that GST is getting better complied. And if somebody is evading or avoiding or finding ways to go around the e-way bill, that will be true for any kind of mattresses and even the low-end mattresses or the BOP mattresses. But the Starlight part of it is we are not avoiding our current distribution system, which is the Sleepwell distribution system, because it's a price which is a bit lower, and there are always some customers whose affordability is like that. However, it is being sort of pushed into or encouraged as far as the other distribution system, which is outside the current sleeper system.
Okay, sure, sir. I'll get back in the queue for further questions. Thank you.
Okay.
Thank you. Before we take the next question, we would like to remind participants that you may press star and want to ask a question. The next question is from the line of Varshit Shah from MK Global. Please go ahead.
Hi, sir. Congratulations for a good set of numbers. So I wanted to understand, so you just mentioned that there's a 19% value growth in the sleep field, right? And if I were to understand the overall picture in the Sleepwell brand, so I think the TDI prices now may at least trend downwards, if not, I'll not quantify it. Would you also take a price reduction in that, or then what would that lead to a margin expansion? That's my first question.
Okay. So thank you very much, Mr. Shah. Yes, TDI is southwards, but frankly, as far as these branded items are concerned or Sleepwell items are concerned, we do not reduce prices. And that's the reason that in the past we have also been extremely prudent as far as increasing prices are concerned, because we know that when some event like this happens, because we don't reduce prices, we don't find ourselves on a wrong price point and or outpriced. So therefore, there is going to be no price reduction on that. Whatever will be the impact, and that depends on the model of the product. It depends on the quantum of impact that TDI would have. To that extent, there would be a margin expansion. It may happen that we may use that, a part of that, to further promote the product, But as far as MRP is concerned, there would be no reduction.
Okay. And sir, another question related to that. So I think with Starlight and Featherfoam ramping up, how do you see the overall EBITDA margins going for the full year FY19 and 20? Because I know that due to a change in mix, the overall profile might shift a little. So what is the overall margin outlook of the whole combined?
So
I mean a range is also fine. Directionally, just wondering.
No. I would give you a general feel for that. You see, as far as Sleepwell and its journey is concerned, that kind of continues, and therefore, whatever is the margin there, whatever is the margin expansion as we kind of premiumize and all that, that journey will continue. As regarding the Starlight and the Featherfoam ones, should not be cannibalizing Sleepwell products. They would be, unless I hope that they find newer markets or increase our market share. But this is the bare mattresses which we sell, that now they are getting covered and being sold. So if you just look at it, there should be a little bit of an expansion on the EBITDA side as far as percentage is concerned. The Starlight and the Featherfoam should really not be a drag on the Sleepwell.
Okay, sir. So understood. Thanks. That's it from my side. I'll come back in the queue.
Thank you. The next question is on the line of Nihal Kumar from Axis Securities. Please go ahead.
Hello. Good evening, sir.
Yeah, good evening.
Sir, I want to know, how do you look the cotton mattress industry as potential market, and what's the scenario? What's the normal tendency in the market? Like, for example, if you see the US market, that is mainly dominated by foam mattresses. That non-cotton mattresses. While the Indian market have been dominated by cotton mattresses. So if you see the trend where these products, consumer durable products, Indian market have followed the US trend, how you see the Indian market in terms of mattresses?
So just as an addition to what you said about the U.S. market, U.S. market has been primarily a spring mattress market, lesser of a polyurethane foam market, while Europe has been a foam market. However, your question remains intact, which is to say that India is a cotton mattress market, and how do you see that change happening from cotton to foam or any other modern mattress?
Right.
See, cotton is something which is available at every nook and corner. The equipment needed to manufacture a cotton mattress is virtually nothing except to gather the cotton, have a fluffing system, and then somebody stitching or sewing a cotton cover, putting the cotton into it, and the mattress is ready, That happens on every corner. The moment the availability and the awareness of a modern mattress increases, awareness based on what we do and whatever is happening in the world, and the information is traveling there, availability in the sense that though we require big machines and big contraptions and big devices to manufacture modern mattresses, but the traveling is becoming easier, roads are becoming easier, trucking is becoming easier. So as you reach all the nooks and corners, that conversion will happen, will begin to happen. It is the modern mattress is so much better as far as maintenance of the mattress is concerned, as far as the usage is concerned, as far as the balance between comfort and support is concerned. It's a better mattress. It's a question of availability, awareness, and I would say a little bit on the affordability side. But by and large, it's not. There are modern mattresses which are affordable for, and that's how the conversion will happen. Yeah.
Okay, so sir, talking about affordability, how much difference you see in the price of our product versus the average cotton mattress product?
So I think you'll have to look at it in two ways. One is the price or the buying price, that this is what a cotton mattress is cost, and this is what a modern mattress costs. So I would say that a cotton mattress would cost about 1,000 rupees, and a modern mattress would cost about 2,500 rupees. However, when you look 3 years down the line, the maintenance part of it would be different. The maintenance for a cotton mattress, you would have spent far more money. What you would have lost out as far as comfort and support, it may not be a tangible amount, but if you put all that together, a modern mattress is cheaper. But as I said, it's something like a capex, opex kind of stuff, because a cotton mattress needs to be refurbished every year at least. It needs to be taken care of somewhere in between or in about 6 months' time. So all that part, while a modern mattress would be maintenance-free or trouble-free.
Okay, sir. Thank you. One more thing, sir. In the beginning, you mentioned about tax refund for the one of the plans. So if that is, how much is it reflecting in the tax?
So, look, this is from the erstwhile times when excise duty was exempted in certain areas, and we have a unit in that area, which the exemption of excise duty was 12.5%, right? And when the excise duty got subsumed into GST, the government had worked out a formula that whatever was the 58% of the IGST, which meant if the mattress has 18% as GST, the IGST is 9%. Of that, 0.58, which may be about 5% or so, would be what you would get as a refund. And this is because of the continuing promise of the government, of the central government. And that's So the process there is that you would first pay it and then claim a refund, and the government would refund it. So that refund has come, and therefore the government is standing up to its commitment.
Okay, sir. But if you can just give a clarity on number, how much have been reflected in this quarter?
I can give you this answer that on the overall sale, this, since you asked what is the impact on EBITDA, is around 0.4%.
Okay, sir. Thank you so much. Thank you. That's all from my side.
Thank you. Before we take the next question, we would like to remind participants that you may press star and want to ask a question. The next question is on the line of Varshit Shah from MK Global. Please go ahead.
Hi, sir. Thanks for the follow-up. So could you just highlight the cash flow generation during the quarter? I mean, could you give some numbers?
Dhruv, can you just take that question?
Yeah, I can. So in the quarter, the cash flow generation, of course, is the PAT plus depreciation, which is around 41 crores.
And what is the closing cash balance as in Q1?
So it's more than 200 crores.
I think that's helpful, sir. Thank you.
Thank you.
Thank you. The next question is on the line of Rajesh Bajra from Qtr1. Please go ahead.
Good evening, Mr. Gautam. My question was with regard to your Australian subsidiary. I was looking at the numbers, and the PAT figure has become negative. It's minus 7 million rupees in Q1, and it has been. And the previous quarter also it was at low. It was just 3 million rupees. So I just wanted to sense as to what's going on in that segment, as to why the margins are going down, why the PAT is going down so sharply.
Yeah, thank you, Rajesh. So as far as Australia is concerned, I have probably 2 investor calls back had mentioned that when the raw material prices were climbing up, like always, we did not do, which was unlike the other times when we pass on the entire amount of increase to the customer, fearing a loss of volumes. We did not do that. That is actually starting from the October-December quarter, and it's only in the subsequent quarters when we were able to stall off any kind of sort of predatory movements by any competition, and there the competition. Sometimes if the price increases are too much, the competition could come as well from as far as China. Once that was over, we started passing on the prices, which have been well received. Last quarter, till the end of last quarter, or the last month of the last quarter, it was taking place, or it was getting passed on. Now it has, and as mentioned in my opening remark, we are absolutely back on track, both as far as top line is concerned and as far as the bottom line is concerned. July, I already have the results. Of course, they're unaudited results. The sales has been one of the highest ever, and there has been a good, healthy profit that has been generated. So I think we should look at that period as a bit of an aberration, and now we are back on track. There is an extra amount which we are also using in India as well as in Australia, which is to establish the SleepX brand. These are the absolute initial times for both, and there is this little. So, but having said all that, we are back on track here.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Nihal Jam from Edelweiss. Please go ahead.
Thank you for the follow-up, sir. So just wanted to ask you, you have been mentioning of a potential acquisition that we have been evaluating. So any further progress on that, and what are the potential lines of business that we are looking at where this acquisition could happen? And if possible, sharing the kind of amount that you would want to invest in this acquisition.
So, thank you, Nihal. Thank you once again. There are, as I mentioned, I think last time, there are 3 on the table. And as mentioned to you, our acquisition would definitely be in the area and in the field that we operate in. In the current in the Indian geography, it will be on the foam and the mattress side. As far as outside is concerned, we will only look at a consumer-facing business, but not at a foam business. So here there are, but the progress on such things is low. They are on the table. There are some discussions which are going on. However, nothing much of materiality that I can convey that we are past a certain milestone but talks are on. They are there on the table. Whenever they happen, they will happen. Yes, I cannot say anything more than that.
Sure. Any mention on the ticket size possible, or the kind of amount that you've earmarked for this?
So the 2 which are on the table, the ticket size could vary anything from about 150 to about 450.
Okay, sir. Thank you so much.
Thank you. Before we take the next question, we would like to remind participants that you may press star and want to ask a question. The next question is from the line of Mehul Mehta from Sharekhan. Please go ahead.
Hi, team. My question is with regards to gross margin expansion. I believe, in the way you are indicating that, you don't want to take any price decrease. I mean, finished product prices on the back of, TDI prices, though they are reducing. So we have about 4.5%, 4% around, ad spend. So do we intend to, increase our ad spend and create visibility as well as increase our distribution network? How do we intend to go forward?
So the gross margin expansion kicking in, one, of course, I have mentioned, depends on the model that of mattress that we look at. In each of the products, the quantum of impact of TDI is different. That's point 1. Point 2, we are not going to reduce any margins. Number 3, whatever is the gross margin expansion, we will take a call on it, that whether we spend a bit of that for the advertising and for the promotion. Regarding the distribution side of it, we don't need to do anything. I mean, nothing will come out from there. The distribution costs are already built into the system.
So going forward, any indication as far as advertising spend, or you still want to that, in the way the TDI prices behave, in the sense, that the way gross margin moves, kind of?
I think advertising is a separate subject. It is something which is decided at the beginning of a year, and we don't mess around with it too much based on raw material changing prices here and there, unless there is a spike or a complete shallow which happens. Because that's creating a brand, or that's increasing a brand salience, and it's not something which impacts a sale tomorrow or day after. So that part of it will remain pretty much in line with whatever has been budgeted and looked after or taken care of for the full year. So I don't see any changes on that.
All right. And one more question on capital expenditure. Do we have anything on annual, like, for current year or next year, like anything major?
So it will happen in current year, and I'm not talking of the standard maintenance capex which is there, which will continue as we go along. But capex to increase capacities, they are there. By the time we have our next call, we should have far more firmer numbers on it and time frames on it. But at this point, let me just say it will happen. Some of it will happen this year, and some of it will definitely happen next year.
All right. Thank you.
The next question is from the line of Nihal Kumar from Axis Securities. Please go ahead. Nihal, your line is unmuted. Please go ahead.
Hello. Am I audible?
Yeah, Nihal.
Hi. Yes, sir. Question has been answered. It was on the similar grounds of capex for organic growth.
Okay. Good. Thanks.
Thank you.
Thank you. The next question is from the line of Govind Lal from GG Securities Limited. Please go ahead.
Good evening, sir. Thanks for the opportunity. I got
Thank you,
only one question. I might have missed your opening remarks. Just wanted to have, again, your outlook on TDI prices, sir.
So, everything that I see, everything that we are experiencing right now, everything that we hope for and we pray for, that the prices should keep falling. I think it should come down to a level of 220, 225. Today morning or today's price is 250. It has come down in the last 3 months by about 50, 55 rupees. So it should fall to those levels. It's the only little caveat to that is that end August, early September, or in September, as we get into the season, the past trend shows some little changes in the price, but those are little changes in the price. Those are seasonal changes in the price that may happen, but not a major impact happening on account of a capacity going off the radar or some new capacity coming in, etc. So just to repeat, we are at a level of 250 rupees a kilo. All my experience says that we should be going down to about a 225 level and should be stabilizing around that.
It is near-term call you are taking, or I am asking a little bit longer term, sir, one year at least, what kind of outlook you have got? It may be okay, 250 can come down to 25, again can go up to 40 in little season, but little bit longer term I am asking, let us say 1 year.
So if I was to make a wild guess, and I hope the TDI people are listening, it should range anything from about 175 to a 225 level there. It should be around that, or let's say around 200 level. Because the manufacturing costs of TDI are in the realms of about 145, 150, and the selling prices should be close to 200 rupees.
So my understanding
plus or minus
is right.
20.
So my understanding is right. If I mean to tell that it should stabilize around 175, 200 levels in a little longer period.
So as I said, it's a lot on the prayers, because in the recent past, TDI has, for the smallest of the reason, has gone through the roof and moved around, and the norms or the levels have been at higher ends. It should It should have been at a lower end, but I'm not getting the 100% confidence. All rational thinking and logical thinking says that's the level it should be, around 200, a little lower or a little higher, but we need to see it happen here.
Thank you very much, sir. I will appreciate if you can take out a little more time. Can you give me a little dynamics why you are feeling almost from 330 levels it has come down again, it can go down to 200. Any little dynamics if you can tell, otherwise I'm fine.
Sorry, I didn't follow about dynamics.
You mean why you are guessing that it can come down to 200? You are seeing that new capacities will come or from here on to fall further.
So we are I'm completely aware of the new capacities which are there. We must also appreciate that TDI as a chemical is virtually there are some only 3, 4, 5 people. We are not talking some small little ones tucked away here and there. There are about 4 or 5 people around the world who kind of manufacture it. It is a product which requires a lot of technical expertise and experience and some patenting, etc. So, and the manufacturing process is a critical process. For small little things, there can be shutdowns happening, and for small little things, people can, can drop capacities or enhance capacities. That can happen. Sometimes it's raw materials which are there, starting from toluene to some other petrochemicals. It's a reasonably volatile, but the volatility is definitely not of the order that it has happened in the past. Where it has moved from a 120 level to a 320 level, and then every time there is a movement of 30, 40, 50 bucks here and there. Generally, the volatility has been of the order of 10 rupees, 15 rupees here and there, which is very, very well absorbable by the company or by the markets that we service in. And it is just this recent pass of uncertainty, I am hesitating to take a confirmed kind of a position. But the capacities existing in the world, capacities coming in, capacities ramping up, there is no reason that it should not be around 200. There is absolutely no reason.
Thank you very much, sir, for your just information knowledge. Last month, GNFC had analyst meet at Bombay. So, yeah. Mr. Gupta, earlier CEO, he has given outlook that TDI prices, they will not come down by 250 levels, max they can come down drastically even if they come down. Just for that, I was curious to know your views.
So that's all right. GNFC may have a little more information, but I think that information about TDI capacity, global capacity is concerned, it's very difficult to predict. But Mr. Gupta was representing GNFC, so I think his hope is that it should remain at 250 or at a higher level. And as I said, our hope and prayer is that it should go down. But just from a sheer capacity, from a sheer manufacturing cost, and whatever is the demand in the world, my guess is that it should be around 200. Yeah.
Thank you very much, sir. Thank you very much.
Thank you. The next question is from the line of Rahul Ranade from Goldman Sachs. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Just wanted to clarify one thing. So the around 60,000 of a volume growth that we have seen, out of that, the bulk of it has come from Starlight and Feather Foam, right?
That's right.
Okay. So and so I just wanted to understand in this context. So what kind of potential do you see for these two to be in the overall mix, say 3 years down the line?
So as I probably said a little earlier, that the growth and the direction as far as Sleepwell mattresses are concerned will continue their own curve, and they will keep following that up. I don't expect any kind of cannibalization happening because of cannibalization of Sleepwell happening, whether because of the manufacturing or because of the distribution channel, because the sheer price points are completely different, and it is our endeavor to expand the distribution as much as possible, which is away from the Sleepwell side. Therefore, both Starlight and Feather Foam will follow their own trajectory, and they have started from scratch last year. So the growth will be quick and fast, and in the next 2 years, expect them to be of the order of about 200 to 50 crores, or even higher, say about 400 crores, while Sleepwell should be at a level of about 1,500 crores. So if I just take a ratio, we would have the 25% of Starlight and Feather Foam mattresses and 70-75%. That is as far as the breakup in the company is concerned.
Sure. All right, sir. Thank you.
Thank you. The next question is from the line of Pankaj Bobade from Axis Securities. Please go ahead.
Thanks a lot for taking my questions, sir, and congrats on good set of numbers. Taking the discussion forward, well, before that, I just missed the cost manufacturing price for TDI. Can you please tell it again?
So manufacturing price for TDI with a reasonable margin is about $150 here, a kilo.
150 rupees, right?
Yeah.
Right. Okay. And to take the discussion which we had earlier on TDI, just wanted to understand if the TDI prices come down, say around 200 or even lower, how good are we at not passing the correction in TDI price to our customers? Rather, I like to understand how much we can build up on our margins given that the TDI prices come down in future.
So they look, as far as the brands and the branded goods are concerned, there would be no reduction in the MRPs or in our pricing of the product. If it really comes down to one hell of a lot, it is possible that the traditional increases that we take, we may skip an increase, but we will not decrease it. As far as the brand parts are concerned, the other part, which is the furniture cushioning and which is the core for the mattresses, on that part of it, there may be some passing on to the, because that is not in a completely finished form. It's branded, but however, it's not a completely finished form, and somebody else finishes there. But our endeavor and our all the effort on our side is that we convert most of them, or as much of them as possible, or keep increasing that number to convert them into finished products and sell into the market. And therefore, the vagaries of TDI or any other chemical prices should reduce on that. But as it stands today, there is possibility that if the raw material prices come down to a large extent, some passing on may become necessary to safeguard our volumes, but not on the branded side at all.
Sure, sir. Thank you. That is of great help, sir. Thank you.
Thank you.
Thank you. The next question is from the line of G. Vivek from GS Investment. Please go ahead.
Yeah, congratulations on good set of numbers, sir. Just wanted to know what are the future plans for extending the distribution reach so that the utilization level, I believe, is still around 30% in our plants, that increases. And what is the opportunity size for technical foam and any plans of forward integration into furnishings? Thank you.
So thank you, Vivek, for the questions. A completely different question from the other ones. As far as First, let me answer the technical part of it. Technical foams are concerned. These are foams which have a characteristic which is different from the normal foams in the sense it's just not cushioning, it's some other parts, like foams used for filters and foams used for sound absorption, etc. In those cases, there is an industry which is there. The rate at which the industry grows, we have to suffice ourselves with the rate of that growth of that industry. Of course, there are two places where we do our bit. One is whatever is being imported into the country, we try and develop similar products or better products at home, substitute them. And the second is that wherever it's being used, if we can put in a little more foam for the comfort and support. Of course, the users resist that because it adds cost, but it helps. For example, if there's a helmet, we may try to put in another few millimeters of foam for the comfort of but then it's a decision taken by the user industry. So there we are, we do have the entire range of technical products, but restricted by the growth of the user industry. Constant effort for the import side, but there's very little left as far as import is concerned. The second question that you had on capacity, that we have capacity with utilization which is only 30%. I presume you are talking of the capacity of a foaming process. It is globally and even otherwise, the issue is not, the foaming capacity does not determine or does not become a constraint as far as supply to the market is concerned. Then there are issues which are space-oriented, issues which are the channel-oriented, issues which are retail-oriented, which kind of creep in. So the foaming capacity may still be 30%, but is enough to take care of all the growth in the market. If we do you may come across times when we, in spite of capacities being 30%, we are adding capacities. Now those addition capacities are in different geographies. Foam is a very voluminous item, and therefore when you transport from one place to the other, there are extra costs. And for a distance of about 300, 400, 500 kilometers, and there is a sizable market there, it makes sense to create a fresh capacity there and save on the transport costs, which balances out all the capex that is being done. Therefore, capacity of foaming is never the determining to sell in the market, or ability to sell in the market, or to establish fresh capacities.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments.
So good evening, gentlemen, once again, and thank you very much for all the pointed questions that have been put. I know that some of them have been very similar to the past, and I guess those are the key areas as far as our business is concerned, which is the chemical pricing, which is the GST impact which has happened of late, and the introduction of products on the lower end of the market. But in all these things, there are positive trends, positive things which are happening in the environment, and of course positive things which are happening at our end. So from your side and from our side, and I say it including from your side, that we hope and we pray that as we kind of go along, all the advantages that we see of the unorganized sectors switching over to the organized sector, we should be able to potentialize those things. So thank you very much and have a great evening.